Hey, this is Trader Travis, and today's video is sure to create enemies for me because I'm coming out guns blazing. And I'm going to talk about all the gurus spreading these insidious lies, like lie number one, 80% of options expire worthless, and that is why you should not buy options. First, anybody that says 80% of options expire worthless is misinformed or lying, and you should run the other way and do not learn from them, and I'll prove why that's a lie in this video. And then the whole notion that option buying doesn't work. One guy was like, oh, it's statistically probable that you will, buying options, you cannot make money, blah, 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 blah. I was like, whatever, right? The more accurate statement they should say is, hey, I just have not learned how to buy options successfully. But I'm going to use historical facts to show you why buying options does in fact work. So I hope you enjoyed today's training. So the first historical fact that I'll start with is the history of the stock market. You see, when you buy options, it is like buy and hold. You only make money when the market or the stock you buy that option on goes up in price. So if buying options did not work, if buying things and making money when they went up did not work, then how have buy and hold investors like Warren Buffett and all these other investors, you name the investor, how have they made money for all of these years? Is because buying something and that asset going up in value does in fact work when you're dealing with the stock market. This is the stock market all the way back from, according to my chart, since 1994, right? Has it always gone up? No, right? There have been extended periods of time where it went down in price. So you would have lost money buying options in, but looking at this, has it gone up more than it's gone down? Yeah. Right? And so what's the key there? The key is to buy options so you can weather these down storms, or just take your losses when it goes down, knowing that, when the market eventually recovers and goes back up, you will recoup your money. And for those who like a different visual representation, here's a visual representation of the market, right? Showing that the blue is when the market has gone up, the red is when the market has gone down and how many years has gone down. And there are options you can buy that expire 2-3 years out, right? So if you bought an option and it expired 3 years out, you think you could have weathered that storm? Yeah, absolutely. There are other strategies. They are called stock surrogate strategies, and I'm in one right now if we come back to my chart. So there are strategies like that you can employ to benefit and to participate in times like this. And then when the market goes down, you can still buy options. They're called insurance or protective put options. So during these time down periods right here, let's come to the chart because you can see it a little better. During these down periods, who said I just have to sit there and take losing money with my call options, right? They say buying options doesn't work. Then how do hedge funds and everything else make money buying options when the market is down? Let me just show you here. Okay, this put option right here, right, is only 5 days. Now let's come out to a little bit further, and you can see how other people are hedging their options. So this put option right here would make money, and it has 159 days until expiration. It would make money when the market fell. This put option costs $1,100. What you have to do is take $1,192, the quoted price, times 100, right? It's going to cost $1,192. Look how many the volume was today and open interest here. When the market opens tomorrow, this open interest will probably change to 4,000, but let's just stick with the 2,000 right there. There are 2,000 open contracts right there. Somebody bought some protection for their portfolio. 2,000 open contracts, and that's just this one little measly option here on this option chain that has, look at all the different options and all the different expirations here, and I'll probably lose my spot here. But let's come back here, all right? That is $2.4 million just on this one option. But yet they tell you to stay away from options because they're risky. Well, that's not my money on this one single call, and that's just one stock. We have Apple, Visa. We have all these stocks in the market where options you can buy and trade options on, and there's 2.4 million just on this one measly little option here. There are trillions of dollars floating around in the options market, right? But why are they telling you to stay away from them? Is because they're secretly telling you one thing and going behind your back making all this money. So for all those people who say option buying doesn't work, well, I'm sorry. Some institutional and hedge funds, somebody has some money here on these options because they know it works. That is how one of my buddies studied insurance companies. He said that's one of the things insurance companies do. He said they put their money, like, I don't know if this is true, but he works in that industry. He was like, they put their money in bonds, right? And then the money they get from bonds, they buy options with. And I was like, oh, because I was like, how do they, guarantee these returns on these, annuities and things like that? He was like, oh, they take the bond money and they use that money to buy options, right? So they could buy either calls to make money when the market goes up, and then they can hedge that with puts. So if the market ever does crash, it doesn't destroy their account. I was like, man, that's pretty smart. Okay, so those are the two historical facts that, okay, option buying does work because buy and hold does work if you do it correctly, right? Another reason I know it works is not just by looking at the historical facts of what the market does, is in my own account. I just showed you an option buying account, right? All right, here it is. Here's an Apple trade I made last year. But it had a 422% return on my initial investment, right? This was buying options. And I was in this, in and out. And I started, let me see, when did I open and started this position? In March, and I closed it out in November, and I actually closed it out early. If I had stayed in it, I would have made like $5,000. So that's my proof there that option buying does work based on my own experience. And again, based on what I'm showing you here. All right, how can it not work when the market goes up more than it goes down? You just have to learn how to buy options correctly. So when those people, again, say option, buying doesn't work, it's rhetoric. They can't prove it, or they need to just say that they haven't learned how to do it successfully like I have, because they can't show you real world results like I have, because I can show you results from the last 20 years of me buying options, and guess what? I make money overall. There has never been a time where I've lost money overall buying options. But that's my experience, which is why I have this opinion. All right, going to the whole 80% of options expire worthless. I'm going to pull up at a site here, the Blue Collar Investor. Now, I've never bought any of his products, but I have followed him casually online. He was what I would consider one of the good guys just based on this one article alone, because he sells options, right? He is an option selling trainer, but he's not poo-pooing on option buying. And not only that, he's not lying and saying 80% of options expire worthless. And so he quotes this right here: selling covered call options or cash secured puts is a smarter strategy than buying options because 90% of options expire worthless. That's a quote he got from some site. He said, we've all heard this argument, but never from me. See, that's why he's one of the good guys, because it's simply not accurate. Remember what I said? Anybody who says that are either lying or misinformed. He said the reason so many venues represent this statement as truth is because only 10% of option contracts are exercised. That is, in fact, true. But from there, can we make the leap that 90% of options expire worthless? And then later on, further down, I was trying to find this on the Chicago Boards and Option Exchange website, but I'll just use his right here. 10% of option contracts are exercised. That is why they say 80 to 90% of options expire worthless. Only 10% are exercised. Only 10% of people actually want to buy the stock, or for me, in the case of put options, I exercise them to sell my stock and things like that, right? But that is a big difference in expiring worthless. Expiring worthless means they lost money, and that's down here, right? But before we get to that, 55 to 60% are closeout prior to expiration. That's the Apple example I just showed you. I'm in that camp. I usually, majority of mine are closeout prior to expiration. I sell mine for a profit and move on, right? Only a small, probably, this is actually my results, 10% of mine, less than that actually, probably 5% of my option contracts is exercised, and it's usually just put options. Now down here, 30 to 35% expire worthless. That's a long way away from 90, right? And this also would be about accurate, all right? Expire worthless means you lost all your money. Well, no. If you bought the option, yes, and it expired worthless, you lost all of your money. And that leads to the next statement and why this guy is one of the good guys in my book. So he says, for put sellers who do not want their shares put to them, meaning you don't have to buy the stock, covered call writers who do not want their shares sold, the 30 to 35% stat is pretty impressive, but it isn't 90%. Now, for the conservative investors, is it better to be the seller of a decaying asset, aka is it better to be seller of options rather than a buyer? In my view, yes, it is, but certainly money can be made on the other side if option buying is mastered and if personal risk tolerance permits. This is why I love this guy in a brotherly fellow option trainer way because he's saying, yes, he admits his bias. He's biased towards selling options because most of his courses are on selling options. But he does admit that, yes, you can make money buying options if it is mastered and if personal risk tolerance permits. And my friends, we have definitely mastered option buying, but not just that, option selling. So if you've ever heard that myth that 80 to 90% of options expire worthless and option buying does not work, again, run the other way from that person. They are either lying or misinformed. You take care. Hope this added value to your life. I'll see you in the next training. Bye-bye.